Live. Usually Sunday Night Futures Live. Happy Labor Day to everyone. I hope everybody had an awesome weekend. I did as well. And time to go to work. All right, so I'm wearing my Playboy shirt tonight. This was a tease on Instagram. Why am I doing it? It's a large shirt. I was on a boat. I was by the pool most of the weekend. Lots of sun. Baggy shirt. Keeps it off the back. I have a couple of spots of sunburn. So that's why I'm wearing my Playboy shirt. All right. We'll let people fill in here, and we'll go to comments as people populate. All right. Tom Lou, hey, boil LNG and COP to cure natural gas longer term. Yes, agreed. I'm concerned about boil, though. I'm concerned about boil. Happy Labor Day to all. Trader Isaac, hello to you. Of course, you got stopped out. Don't feel bad. Good evening, Bob and crew. I'm going to do it tonight. I'm going to do the monthly charts tonight. I didn't do a separate video. I just took the weekend off. But we'll do it tonight. Seymour Rivers. Hello, Gringo. Sound check. Very good. Thank you. Devin. Hey, Devin. Larry, the Yankees are playing it. Bad baseball. You, me, and the 7 bums from Flatbush should go to Yankee Stadium and beat them. We could do that. I'm not a big Yankees fan. I have people that are Yankees fans. A good friend of mine is a Yankees fan. But I like the underdog. I'm a contrarian, so I like the Mets as much as they usually give up the wins at the end. 1986, though, great year. Frank? Thanks, well. Yeah, it was great. You know, we spent a lot of time at a it was a music festival. The music festival was held on at a lighthouse, and you had all these boats surrounding it. And that was just off my coast here. Excuse me. That was Lloyd Harbor, and then we went to dinner over at. I just lost my glasses. Over at here we go. Over in Connecticut, over in Norwalk, a place called the Sunset Grill. So we sailed across the Long Island Sound. It was a very nice time. We had a great time, but ready to go back to work. Well, happy Labor Day to you, my friend. Is China's economy issues going to trigger global issues? We're going to go over that in a minute. They're intervening in the Forex markets over there, trying to weaken the or stem the weakening of the yuan. All right, let's get to it. Let's do some futures action. I've been watching these. Danny, yes, thank you very much. Smash the like button, folks. And folks, if you're new out there, you're not familiar with the terminology I use: bullish reversal, bearish reversal. There's a link below. My top 5 favorite candlestick patterns. It's free 5-part video tutorial. Sign up, get them for free. 1 video per day for the next 5 days. And if we talk about option strategies later on, you're not familiar with what a strangle strategy is, video below. You can check that out at your leisure. All right. So, before I forget, I didn't go over to TrendSpider, but they usually have a big discount, bigger than what I normally give away. So I give 35% off. They're probably doing 50% off. Don't quote me on that. Go over to the website, link below, and check it out. You can get another potentially 10, 15% off of my discount. All right, let's do it. So the rumor about natural gas being cut to Europe was floated on Friday, and obviously that was not met with great fanfare. But the concern, and many people probably think that I'm coming on to tonight's broadcast talking about natural gas in bullish terms. I got to say, there's certain times where you look at a chart and you say, this should go up on this news. And when it doesn't, that's a tell that there are probably issues out there, whether they be technical, fundamental, that you're not aware of yet. and the market may just be pricing in a global economic slowdown, and the need for such high price natural gas may not be warranted. So we're long of natural gas. And so I'm not speaking my book here. I'm speaking against my book, because as we talk right now, it's official. Natural gas has been cut off to Europe. You would think that from Russia, you would think that natural gas prices would be reacting here, and they're not. They're down. And when I take a look at a 4-hour chart of natural gas prices, I took a look at this at the end of business on Friday, and we broke down. Actually, this includes Sunday's price action. They were trading on Sunday night. We broke down on Sunday night. Sorry, it wasn't Friday. It was Sunday. We broke down below support, and we still trade down below that support level at current on a 4-hour time frame. So what should be very bullish news for natural gas is not playing out that way. Maybe tomorrow is another day. Maybe when Europe opens up, we'll see a bid on the natural gas, but right now you're not seeing it. So just beware. Beware of the headlines out there. They're very, very bullish for natural gas. Price is not responding. That's a tell. Beware. So tighten up your stops just in case. We will. And if need be, we stop out. And we have a covered call trade out there. We'll turn it into a naked call trade if we break down to new lower lows. We book profits on our September covered call position. We rolled it out into October, yet at a higher price point. So we're in a good spot here to go naked on our Boyle calls here, naked, if we break down to new lower lows. Yoga Mac, hello, sir. How you doing, pal? Let's go lower. We're probably going lower. Hey, Bob, gold has to turn around at some point, right? Yeah, there's a couple of things out there. I'm going to go over the monthly charts of gold and the miners. Pretty interesting stuff where we landed and where we're finding support at current. It's all consistent with each other. So I'm going to go over the monthly charts tonight. So stick around, because what we want to do is we want to take a look at how did we close out the month of August. And then we want to take a look at, okay, in the month of September, are we holding the August lows? Are we putting in lower lows? That's what we want to take a look at. We want to take a look at, do we have a trend developing where we continue to take out lower lows on a monthly chart? If so, look out below. So let's take a quick look at the futures action. We have a lot to get through. I'm going to blow through these really quick. It's thin trading right now. I've already gone through these. The US dollar index, it was higher on Sunday night. It's come in. And I have a reason to be a little bit bearish on the dollar, besides my positions will do well. The 10-year yield is up. We're, Jesus, Mary and Joseph. We are just shy of last week's highs. This is a 4-hour chart. And what we're going to be looking for here is the question of, do we take out the highs at 3.50 and create new yearly higher highs? Now, at current, what we're looking for here is a breakout. And for those folks wondering, listen, I tuned in here to learn about the next hot stock. You're at the wrong place. This is a strategy session. We're not going to talk about the next hot stock. There's plenty of YouTubers out there that don't know what they're talking about, and they wouldn't know risk from reward. So you may want to go checking out their channels and get bad advice, because what we're looking for here are the catalysts for which to send this market a lot lower or a lot higher. And with that move, in all probability, the stock that you like is going to move in the direction of the market anyway. So it pays to know where the markets are going to go. And to do that, you need to know what drives the market. And I've been saying for weeks now, you must watch the 10-year yield. If you're ignoring the 10-year yield, you're ignoring the catalyst, the key catalyst that could send the market higher or lower. It's as simple as that. And sure enough, once we blew through a 3 handle on the 10-year yield, the summer rally stalled. As a matter of fact, we were at 2.90 on the 10-year yield. Summer rally stalled. We hit resistance levels. We got short. We booked our profits in total last week on our short position. And we're looking to get short yet again, ideally on a counter trend rally. Now, what we're looking for here is a continuation move higher on the 10-year yield and a move towards that 3.50 mark, technically 3.499 on the 10-year yield. If we break out above that mark, you could bet that the stock market is going to be in free fall. Why? That's what sent the markets down lower back in where? Was it April? June. Sorry, June. So beware. We are in a consolidation range. And if we break out here, you're going to see a lot of problems, because remember, after we hit this high back in June, the 10-year yield went into a decline. What did stocks do? They went like this. So the market is telling you, if we get a breakout here on the 10-year yield, you got to be careful of being long of stocks. Let's move on. Let's take a look at equities. As a matter of fact, I went to the dollar. I went to yields. Let's take a look at what gold prices are doing right now. Let's stick with the commodities trade. We'll come back to equities in a moment. Gold was up most of the day today, by and large flat. It was an abbreviated traded session today. It was up. I was kind of surprised. We saw a shot higher on the dollar on Sunday night. I expected to move lower on gold. It didn't happen. Gold is holding a bid. That's a good sign. We held monthly support. We're going to go to that chart in a moment. And let's continue on with commodities. I want to go to silver. Silver prices moving up higher. Again, this is another commodity that is really developing a nice higher low. Let's check that out. So you can see we bottomed out back here last Thursday, and we're drifting up higher. Not a major move higher, but the downside momentum is clearly waning. So the rate of change to the downside is subsiding dramatically. Now, moving on to agriculture prices, I think they're getting ready for a new leg up higher here, folks. So buckle up. We've been talking quite a bit about wheat prices. And for this, we want to go to weekly charts because we don't watch them day in and day out. This is silver on a weekly chart. This is looking pretty darn good. Know what we did. I'm going to go to wheat in a moment, but I just happen to stay on this and notice that we bounced off of support last week on silver. This week so far, we have an inside week, and it looks as though they're going to defend the support level on silver, looking good. Moving on to wheat. Now, wheat, we've been watching on our live streams. Is this the wheat contract I want to look at? I don't think it is. Here. This is the contract I want to look at. So here is a wedge formation. And what did we do last week, the week of August the 29th? We broke out. This is significant. This is for real. Yeah, we faded off the highs of the week because you have resistance above, but wheat prices moving up. Is that it? No, you have corn prices which have broken out as well. They broke out the week before last. I think that they're going to probably pull back in and do a retest of the breakout point here in red at around 644 the bushel. Moving on to soybeans. Soybeans are extremely important. They are in a very, very tight wedge formation, very similar to wheat prices. So commodities, agriculture in particular, are looking very strong here, and it looks like they're getting ready for a new leg up. So that being said, energy prices are coming in. That could be, it should be an offset to food prices. We'll see how Europe opens up and responds to the Nord Stream 1. Well, they were open today, so they did respond to it. So it really wasn't much. Europe was open today. Let's go to equities. Russell 2000. Oh, wow. Wow. Surprise. Let's go to a 15-minute chart. Russell is up spot 66%. Nice move up higher here. S&Ps up just shy of a third of a percentage point. You could see they were trading today, but very, very light volume and a very tight trading range. The NASDAQ 100. Clearly, the Russell has been outperforming the NASDAQ and the S&P 500, and it continues to do so tonight. So futures are up for equities. We'll see whether or not they hold these gains into tomorrow morning. And let's go to the monthly charts first. Let's check out comments. Gold is testing 1680. Okay. Saw an interview with Rich Dad Poor Dad guy, Robert Kiyosaki, right? And an expert in demographics. I post a link in the chat. Sure, of course. Talks about baby booms and the rise in. Yeah, there's definitely a demographic problem that we have going on here globally. It's not just the United States. I mean, you have the Russians that are paying women, I think it's $10,000 or $15,000 for if they have like 5 or 6 kids, and they get a medal as well, like the highest award in Russia. I'm not sure what U is. There's another. This Shamthai year ends. 25 markets plunge soon. Okay. Falcon. Hey, Falcon. How do you feel about Kaiser? It's going to be a massive amount of pressure on aluminum prices across the board. You stop production, prices go up. They don't go down. You know what I mean? Unless, of course, you kill demand. So the EU is going to have to continue to jack up interest rates, and they haven't really even started. At least our Federal Reserve is pretending to begin to start. They haven't even begun to start the fight over there. So they're going to have to kill demand because the price is just going to increase if they cut production. Nutshell, Democrats so the long term after. Okay. I have a group question. Has anyone received a large refund check back from the life insurance company? I haven't checked, but I feel like I have. Like they refunded me my premium. I don't know. I know the actuaries are freaking out over life insurance companies because the death rate of men between the ages of, I think it was 28 to 40, something like that. I forget what the bracket was specifically, but those men, the amount of surge in death rates, not suicide, non-suicide, has surged. And I'm not going to say it's the jab. I'm not going to say it's not. Thanks, Denny. Hey, Falcon. It was okay. We'll skip over that stuff. The Fed is reducing their balance sheet, and that could push the market higher in the deflationary environment. Western law. The Fed is reducing their balance sheet, and that could push the market higher. I'm not sure how that would be. If they roll off debt off of their balance sheet, that puts more supply on the market. And if the Federal Reserve is not willing to buy that debt, that means the Treasury is going to have to pay out more in interest for other entities, governmental, non-governmental, to come in and buy that debt. So I'm not sure how that's deflationary. It's not good for the markets at all. Cost of borrowing goes up. Don't let Russian ladies have to date Putin for that middle. No comment. I don't want any hitman coming after me with cyanide pills with what do they put? Radioactive cyanide pills. Do the 20% of workers getting laid off of Best Buy split the CEO's policy? Oh my God, that's cold. Cold. Savages. So a number thrown out today on EU spending, 50% of GDP. Oh, yes. All right, let's get to it. Let's go to the monthly charts. Okay, yield curve, monthly view. For those not familiar, the yield curve has predicted every recession except for one since 1955, and we remained negative in the month of August. This month, we're actually steepening on the yield curve. A lot of time left to go in the month, but we are still inverted on the yield curve. 10-year yield, monthly chart. We closed out very strong in August. We have a continuation move up higher, month over month. Weekly view. How did we close out last week? Right at resistance, right? So I went to that chart earlier on Thinkorswim, right? I drew that alert. That alert takes you back to June. That's where we peaked out on the 10-year yield. The question is, do we break out above this resistance level here? If we do, major problems for equities, especially high tech, high beta. Now, the 20-year bond ETF, TLT, if we're breaking down to new lower lows, it's confirming the move higher on the 10-year yield. And it looks as though we want to press lower here. We saw a bid, I believe it was on Friday, on the 10-year yield. We came off the lows of the month, but we have a lot of time left to go here. All we're doing this early in the month is we're taking a pulse check. We're answering a question. And it's simple. We're going into the second week of August. I wish. Of September. Do we have a new monthly lower low? Simple as that. The answer is yes. On the bond price, the answer is higher highs on the 10-year yield. So not good for equities. As for the dollar monthly chart. Now remember, we're heavily invested in gold mining stocks, gold, silver. So we want a weaker US dollar. So the dollar remains stretched on a monthly time frame. That being said, it put in a new monthly high. RSI 77.7, a bit overbought, but we have been higher in the past. So there's more room to the upside here. We're clearly flirting with the 3 standard deviation. We've already done that. 3 standard deviation Bollinger Band remain extended beyond the 2 standard deviation Bollinger Band on a monthly time frame. Weekly chart. Weekly chart, a strong move last week, a new weekly higher high. Stokes are very strong here. Now, when you take a look at RSI, have we taken out prior highs? The answer is no. But we are still moving higher. I don't want to call this a divergence yet. Volume was very good last week. These stochastics are very, very long in the tooth. The dollar rally, while it could certainly continue, is in the final stages of the rally. I'm not saying that it's done going up permanently. I'm just, because Europe is just so bad, I'm just saying that it's due for a correction. Now, the VIX on a monthly chart, very, very surprising stuff. We actually are down on the month and down below the lower band of support of this triangle formation. We did manage to close up on for the month of August. So we're down in the month so far. We're down below critical support on the monthly time frame. So this is a bullish indicator right now for equities. Kind of surprised to see this, but it is what it is. And we just say to ourselves, you know what? We have a lot of trading days left to go in the month. So let's give it some room. The Dow transports, this is our canary in the coal mine for equities. As go the transports, so goes the rest of the market. And we have new monthly lower lows for the transports. Which way are the transports going? Where do we think they're going to end up? Simple. Take your crayon out. I think that we can head down to 1,200, 1,150 on the Dow transports. And we have been in that camp that has said, even during the summer rally, this rally was going to be a bear market rally, and it we're probably going to test the June lows and probably break them. We're still in that camp. That's why we went short, and we did well. But again, we're out of our short positions right now. But we are looking to reload. Dow Jones Industrial Average, new monthly lower lows. So the trend here, folks, is that we continue to weaken up. We'll do it again, just as we do with the transports. Take your crayon out. And all you need to do, this is all you need to do. If you're new to technical analysis, you're new to stocks, you're wondering if the bear market is over, it's simple. It's so simple. Take your crayon out. Draw the upper band of your downtrend channel. Draw your lower band. As long as you keep meeting resistance up at this resistance level and breaking down to new lower lows, your bear market's alive and well. So right now, we ask ourselves the question, did we break out last month above the upper band of resistance, or were we rejected? We were resoundingly rejected, and now we put in new monthly lower lows. And we know that we did not see a lot of institutional buying during the summer rally. How do we know that? There was no volume. Also on these charts here, folks, a lot of people use the stochastics as an indicator for oversold or overbought. Wrong, wrong, wrong. That's not the purpose of stochastics. You can use them for that in conjunction with RSI and other indicators, volume, price. But the appropriate way to use your stochastics, they're a momentum indicator. That's it, pure and simple. I'll keep it very, very plain vanilla, because I need to be spoken to like a 6-year-old child, okay? Lines going down below 50 especially, rallies tend to fade. Rallies tend to fade. What happened last month? Case in point, Stokes were trading down below 50. We were rallying on the month. What do we do by the end of the month? Bearish key reversal. One of my top 5 favorite candlestick patterns, link below, 5-part video tutorial, free charge. So now we're seeing the ramifications of that reversal. What happened to my lines here? Did I delete them? There they go. Now we're seeing a lower low, a continuation breakdown. We're coming down here. We're going to retrace back down to the June lows and probably break it. S&P 500, again, monthly chart. Now, this one here is very, very concerning to me, because what you're looking at here is a chart that has marked the lows since 2009. So think about it. This chart goes back to the great financial crisis, the bottom. You draw your trend line up. You had one closure down below it. That was back here in March of 2020. That was COVID. You know what? I'll scratch that. We'll call that was a panic sell. Let's scratch it. During a normal environment where you're not shutting down entire global economies, we'll normalize the chart. We're going to ignore that. So right now we're at the precipice. We're at the precipice of a potential breakdown below this rising lower band of support. Folks, we do not want to be on the opposite side of the support level and long of equities. It doesn't mean we go straight down if we close down below it. But once we break, and if we break, I don't have a crystal ball. I believe we're going to break. I have the charts that are on my side that say we're probably going to break. If we break 362 spot 17 on the spiders, it's all over. You're going to see forced liquidation and computerized selling like you've never seen before, because that means that A, we've taken out the June lows. B, we have broken down below the long-term trend line, the lower band of the rising uptrend line for the S&P 500. That is like Armageddon for technicians. Weekly chart. We haven't broken it yet. Here's the weekly chart. Now, last week, we saw a continuation breakdown. We pierced below the 20-period moving average. It looks as though we have to go lower, folks. We have to. Why? Because that's where support is. Support is down here. We did not close at support. Support is down here at around 385. Normally, you want to see an overshoot like we did back here in July, overshoot to the downside, not once, but 3 times before closing back above support. Triple Qs, of which we were short. We've covered that short. We are now out. We have seen a continuation breakdown again. What we want to do here is take our crayon out. Play connect the dots. Here you have it. There's your downtrend line. So if you're wondering, or you're asking yourself the question, hey, man, you know, I'm just watching CNBC, this really well-dressed guy. I want to be that guy. I'm sure he's driving a Lamborghini or Ferrari on the weekends, has a house in the Hampton. Yeah, because he's selling BS on you. He's selling him. So a sale is made every single time. Either he sells you or you sell yourself on not listening to the guy and watching the charts. Because what we have so far is a rejection at the upper band of resistance on a monthly chart. We broke back down below support. Remember, in July, we broke out above resistance. In August, we had a continuation move up higher, but we never held the breakout point at 303.72 on the triple Qs. This month, do we have a new monthly lower low? Yes, we do. So we have a continuation breakdown on a monthly time frame. This is a real macro view. This is like taking a 100,000-foot view of the battlefield, right? You're not looking at a daily chart or, God forbid, an hourly chart. You're taking a step back and say, okay, what does the battlefield I'm day trading in or swing trading in look like? What's my environment? This is how you check that environment. You take a look at your weekly charts and monthly charts. On the weekend, avoid the daily charts. Avoid the intraday charts. They're worthless unless you're timing a trade. Let's go to a weekly chart here. How do we close out last week? We closed out last week at support. So we shorted up here. We shorted using put options. We also shorted by buying the SQQQ. And we hit support. We got out. So might we see another rally on the triple Qs? Sure, that can happen. Where would I want to get short yet again? I'm thinking 310 to 312 on the triple Qs. We'll reload on shorts. Volume rose last week, but still below average. Those folks not familiar with what a short is, it's a negative position. You're betting that the stock is going to go down. You're not buying it. You're borrowing it from your broker, and you're selling it. And you have a negative position. You want the stock to go down. the banks. Now, I don't know why this is a daily chart. I got to fire my producer. I fire thee. So the banks, I got to be honest with you, this is not a bad looking chart here. Now, remember, banks do well in a high interest rate environment. Why? Because they're crooks. They are allowed to charge usurious fees on credit cards, and they do very, very well in a rising interest rate environment. They loan out money at higher yields, higher rates of interest, I should say. So the banks, I want to do something a little bit different here, because if the S&P 500 somehow finds support and we begin to rally, I can't help but conclude that while if yields are moving up higher to the mid threes on the 10-year yield, tech is going to go this way, pretty much guaranteed. But the banks should be one of the beneficiaries of the move higher in the S&P 500. They should be a contributor, a driver of the move higher on the S&P 500. That's why we want to watch the banks. So here's our support level. And I want to do this. Draw a little bit of a trend line. We had a doji star formation last week. And there is our triangle formation. We're looking for some relative strength here on the banks. Because look at the candlestick so far this month on the banks to doji star formation versus the triple Qs or the Dow transports. Not a huge difference, but there's a difference. It's a much thinner body. There's indecision. You could see, you could feel it in the banks. Indecision between bulls and bears. Weekly chart. Now on the weekly time frame, we broke support last week. I would not buy the banks here. I'm just watching them. That's it. Volume was light, but it rose versus the two prior weeks. Volume was light. Small caps. Monthly chart, new monthly lower lows. I'm not going to spend more time drawing trend lines. I think you get the drift, right? The bear market trend is clear and defined. There's no arguing the direction of the market. It's down. It's down until it's not. We got to start putting in higher lows, higher highs. Once we do that, then we're good. We'll get long of the market. Right now, no way. Semis. Now, the semis are, I don't know what's going to happen here. I mean, the news out of Washington is not good. Ceasing chip sales, certain chip sales to Russia and China, adversely impacting NVIDIA, one of my favorite semi stocks. Come on, stockcharts.com, get your act together. So the semis are so weak. God damn it. This is wrong. I have a ACD or OCD. This has got to be right. I'm very particular about my trend lines. All right, there we go. Now, this is interesting here in that we are already at, no, this is wrong. This is still wrong. Yeah, okay, so this makes better sense. Sorry about that. Brain fart. Okay, so the semis consistent with the Qs, new monthly lower lows, doji star formation on the month so far. A lot of time left to go. The trend is clear and defined to the downside. Weekly chart, we broke support last week. This was a breakout point failure. We had broken out here. Then breakout point failure, also known as a bull trap. People who bought this breakout, they got annihilated. They got annihilated. So you could bet your bottom dollar that once we ever get back up to 248, 249 per share on the SMH, the semiconductor holders, you're going to see a ton of selling up there because a lot of people have gotten burnt at that mark. Biotech. This is the LABU. We have a small position in this. We booked profits back here, and I want to get back in. We're watching it. The monthly chart of August, big topping tail. This is, to me, is a bear flag setup on a monthly time frame. We haven't broken support yet, but what we need here is a higher low. And if by chance we're able to break back and close above a 10 handle, let's make it $10.10, give ourselves a little bit of wiggle room there. I would be a buyer of LABU. Right now, one way to trade LABU is sell naked puts going out to maybe 750 strike. Where do we close? Yeah, 750 strike makes sense. 45-day time frame. If you can get a better premium down at not a better premium. If you can get paid a nice premium, a decent premium for your risk down to the 7 handle going out 45 days. I'm using 45 days because that's when time decay really begins to pick up on options. Sell premium down at that price point. I like that price point to get back into the long side. And if it never comes down to that price point, a close back above a 10 handle looks interesting to me. Now, energy in August closed up on the month. But so far this month, we don't have a new higher high. This is what you call, excuse me. This is what you call the energy sectors in general. So it looks like they're coming for the generals right now. Sellers are coming for the generals. They're looking to take them down because you had topping action in August. So far this month, we are trading within the body of last month's open and close. And when you take a look at this chart, you got to ask yourself the question, do we have a potential double top here on energy? And you may be saying, wait a minute. Ukraine, oil cutoffs, natural gas cutoffs to Europe. Well, they're also killing demand as well. So I would not be a short of energy right now. I'm just saying, watch out. Because the monthly chart doesn't look horrible, but the weekly chart was not good last week. They lured in a lot of bulls, a lot of buyers on a continuation move higher week over week last week. What did we do? We reversed on the week. So we had a reversal week, not a bearish key reversal because we didn't close at the lows of the week at current. The support level at which we've been finding support on the XLE weekly time frame is a 20-period moving average. You could see it here in green. We break and close down below that 20-period moving average. The thesis I have about a possible double top on the energy sector becomes all the more possible. So I'm not predicting it. I'm just saying watch out for it. I think that the odds are, I think the demand odds out of Europe, because they're in such a crisis right now, outweighs the ability to crush demand by the central banks. So people have to heat their houses. That demand is not going away, and supplies certainly aren't coming rushing back into Russia unless, of course, there is a peace deal behind the scenes. And I mentioned this the other day. I even posted in the members area that immediately after I mentioned the topic, I went into Zero Hedge, and there was an article out there how an Iranian brought a peace deal to the Ukrainians that came out of Russia. So there could be something working behind the scenes. That may be why you're getting a weakening of gas prices and a weakening of oil prices a bit. So keep an open mind. If they find peace in Ukraine, you're going to see natural gas and energy stocks take a nosedive. Now, West Texas Intermediate crude, we'll go to the monthly chart first. We have broken trend here. Not many people are talking about this, but oil has broken. It did so last month. It broke the lower band of the rising uptrend channel, which began back here, April of 2020, when oil basically went to zero due to COVID. That is now in the rearview mirror. Nobody's talking about it. Weekly chart. Now, on a weekly time frame, they tried to break it out of this wedge formation. It didn't happen. It reversed. It looks as though we may break support here on West Texas Intermediate crude, weekly time frame. So you got to ask yourself, what the hell's going on? What's going on? So, and then the reason why I say this, I'm about to go over a bunch of headlines that look very, very natural gas bullish, very oil bullish. But what if those prices aren't going up? There's a reason. We shouldn't ignore the inverse price reaction, meaning when you have a bullish headline and a bearish print on the tape, something's up. Something's up. Gasoline prices continue to weaken up here. You want to call it the release of the strategic petroleum reserves? Maybe. I'm not that smart. Maybe. That was a weekly view. Let's bring up nat gas. Natural gas, a down week last week, a reversal bar. So let's take our crayon out here. First, let's go to our save chart. Monthly chart. Monthly chart, Bob. Monthly chart. You could do it. There you go. So our monthly chart here still looks pretty good. Our momentum indicators, clear and defined, higher lows and higher highs. Check that box. Price action monthly time frame. No new monthly higher high. We're down on the month. We have plenty of time left to go to salvage the month. I'm not all that worried from a monthly perspective. However, when we drill down to a weekly view, which we were just at, you got to worry a little bit. Yeah, we did get extended relative to the 2 standard deviation Bollinger Band, and you got to expect pullbacks. So the question is, when do you begin to worry? You got to identify your support levels. And last week we closed right at, and before I go into this is an unsustainable move up higher. All right, I think we can agree upon that. This is just a parabolic move up higher off of this sell-off that began back in June. So I'm not going to be the least bit surprised to see us break the support level in blue. If we break on the UNG, $28 per share, warning flag on the track. You really got to stop out of, or think about stopping out of nat gas. Also take note, weekly time frame. We're putting in lower highs on RSI, yet we're putting in higher highs on price. That's a negative divergence. So if you're looking for what is a negative divergence, you're looking at it. You're not getting your momentum indicator, the RSI, confirming the price higher. What can you blame it on? You can blame it on the reversal bars that we've seen these past couple of weeks. It's dragging momentum lower. So it's just horrible price action, and it's magnifying the RSI considerably. We'll blow through staples, new monthly lower low. We're still holding the breakout, though, on a monthly time frame. Staples are still strong on a relative basis. They have not given up that monthly breakout. Discretionary names. They never did break out. Rejection last month. Continuation move lower this month. I saw an article earlier. I'll share it later on in the week about how they are now have applications on Google Play. They won't let Truth Social on Google Play, but they'll let applications on Google Play allowing people to take out high interest rate, high fee loans to buy groceries now. Bitcoin monthly chart. Bitcoin is the correlation with equities is very, very high on Bitcoin. We do have a lower low, 19,527. No, we haven't broken two new lower lows yet on Bitcoin. So Bitcoin is kind of finding a bit of a base here. And stocks are very oversold. So unlike the other stock indexes that we looked at, where I said rallies tend to fade, momentum indicators moving lower, beware. You don't have that here. You have stocks which are flattened out. That doesn't mean Bitcoin is going to go straight up, but you're one step closer to hooking up and that momentum changing from neutral bearish to neutral bullish. Weekly chart. Now, this is what I'm talking about earlier. What I would like to see with LABU is a higher low get put in here. Oh, this is ARC. What am I on ARC for? How did this pop up? Weekly chart. I clicked the wrong link. Yeah, so same thing here. Do we have a higher low? Maybe. But we don't want to go buying more. Actually, I bought more today, to be honest with you. I dollar cost averaged in today. That happens every week, though. I wouldn't get aggressive with Bitcoin until we recaptured 22,500 and we closed there in a weekly time frame. Gold. All right, so we were talking about gold earlier. Some saying 1680, 1600, maybe. Stocks is declining, trading down below 50. Rallies tend to fade. I've been bearish on gold of late. So I haven't sold any of my gold stocks. We've sold covered calls, but and I've tried to put on long trades using options to speculate higher. Didn't work out well. Truth be told. Weekly chart last week, not wonderful. When do we know things are going to get better here? You got to see the dollar break. Here's your downtrend channel. Do we have a possible higher low? Maybe. Maybe not. We don't know. We'll know by the end of the week, and we'll know, especially when we break out to new higher highs. If we keep this new higher low, and if we break out and close above 18.24 the ounce on spot gold, then you could expect higher highs on price, and I would be an aggressive buyer of gold. Right now, I'm still in the bear camp on price action. Now, I mentioned that there were certain consistencies with the gold mining stocks. Nugget found support at the 2020 lows, at current monthly chart, holding it. And in fact, last week, Nugget, this is a leveraged ETF putting you long on the gold mining stocks. We own it. We have covered calls on it. We did break down below weekly support. This looks very much like the gold chart. I suspect we're probably going to rally back in an effort to try to recapture the support level. I would not be a buyer of NUGT yet until we close back above, let's call it $28.50 a share. If you're going to speculate long right now, you got to use a stop loss on a new weekly lower low. You got to do it because you can see the teams. GDXJ, again, monthly chart. What do? We're holding monthly support. NUGT did it. GDXJ is doing it. So, and even when you take a look at the silver stocks, monthly chart, we're actually up on the month now. We're holding monthly support. and this I wanted to keep up. I wanted to point this out. Indonesia, we booked profits on Indonesia a while ago, but it's now bouncing back and looking good. It's trading back above this breakout point. Indonesia, very strong economy, and they are mineral rich, resource rich, and they're a very, very organized country. What time do we have here? Wow. All right, really quick. We're gonna stay on longer tonight. We'll do our chart requests as usual. This coming week, we're gonna have CPI come out. Wow, that comes out tomorrow. Wow. We're going to get producer price index. It's the measure of inflation at the producer level on Wednesday. Thursday, we always get initial jobless claims. They're creeping up. Empire State Manufacturing Index also on Thursday. Remember the last print, they expected last month a positive read on the Empire Manufacturing Index. The actual came in at negative 31. Horrible. We're going to get University of Michigan Sentiment Survey out on Friday. Earnings this coming week. We may trade Bitcoin. No, not Coinbase. DocuSign, maybe. Other than that, I don't see much on here. I would not trade NEO or GameStop. Maybe DocuSign if it's really beaten up. Other than that, no. I haven't even looked at the chart yet. Valuations of the market. Back down to a 29 handle on the Shiller PE ratio, Buffett indicator, back down to fairly valued, but still, relative to the fairly valued indicator, we're still overvalued by 33% on the Buffett indicator or 0.9 standard deviations. So stocks are still rich. So really quick here. This is from the film Gladiator. The barbarians are the Europeans. Russell Crowe and this fella are the Russians.
People should know when they're conquered.
So the war rages on over in Europe, and Europe, the EU has no idea that they've been conquered yet. They still fight the bad fight. But what we do is we look at the ruble versus the euro. The euro is not just at 5-year highs, as I have marked here. It's at highs not seen since 2015. So you measure who's winning the war by who has the buying power. It's clear that the Russians have the buying power. The European Union does not. I want to play this for you as a reminder of who is pulling the strings over in Europe.
And I have to say, when I mention now names like Mrs. Merkel, even Vladimir Putin and so on, they all have been young global leaders of the World Economic Forum. Mm-hmm. But what we are very proud of now is the young generation, like Prime Minister Trudeau, President of Argentina and so on, that we penetrate the cabinets. So yesterday I was at a reception for Prime Minister Trudeau, and I know that half of this cabinet, or even more, half of this cabinet, are actually young global leaders of the World Economic Forum.
All right, so yeah, the World Economic Forum that loves the power that the Chinese have. The Chinese want to have that authoritarian rule over the rest of the globe, so they have influence. So if you're wondering what the matrix is here, it's the Chinese leading the globe towards a totalitarian system. And the World Economic Forum, they're helping guide the West towards self-destruction. Everything that is done is self-inflicted. Everything. So when you take a look at the new leader over in the UK, because Boris Johnson was an absolute catastrophe, don't get too excited. After a drawn-out contest, the country's ruling Conservative Party on Monday picked Liz Truss to be the new leader of the UK's new prime minister. Sounds great, right? We got rid of Boris Johnson. Wow. Things are going to get better over in the UK. One problem. She's a member of the World Economic Forum. Her face is still up on their website. Now, I can't go through all these. I don't have time tonight. The EU makes its peace with economic war. This is controlled self-destruction. They shut down they thought they were going to be able to cap the prices that Russia was going to charge for their oil. Think about the arrogance here. They were going to use their monopoly power on shipping and on insurance to dominate the Russians, except the Russians could hold off. The Europeans cannot. Winter is coming, and it's coming fast. So European electricity prices could reportedly hit new highs this week when a flood of problems already flowing from energy prices is already staggering. 6 out of 10 British manufacturers may go to the wall. Done. Experts warn of energy rationing that could see Brits told not to cook until after 8 p.m., pubs close at 9, and 3-day weeks at schools. Aluminum smelters, as was mentioned before by very wise watchers here, they're shutting their doors. What does that mean? Lower production means higher prices. It's inflationary. It's inflationary unless you kill demand. That's why the EU is going to have to raise interest rates. This is going to get bad. The Netherlands warns of a plunge in flowers, fruit, and vegetable output. And that's because the government said you can't plant anymore. Why? Because they want to keep in accordance with Klaus Schwab over at the World Economic Forum. Spanish output of ceramic tiles has halted, and a slew of Italian firms didn't come back after the summer break. Regardless of gas storage levels this winter, Europe faces an industrial supply chain collapse. That is an understatement. And just as it has pledged to rearm to face a worrying geopolitical future. Alongside higher interest rates, this is bizarre. MMT, modern monetary theory. If you want to know what our experiment was with modern monetary theory, stimmy checks. What did that result in? Inflation. Here we go. Failure is revisited. Alongside higher rates, MMT will also need to back state spending in vital areas, such I don't even know that word. Credit will reallocate scarce resources towards supply chain restructuring and away from the likes of too much high-end housing. Indeed, the question is when, if we also get non-fungible credit. Now, this is where it gets scary, folks. Credit to key firms that can only go into specific capital, physical capital, rather than being arbitraged. Here's the final word, or the final sentence. Buckle up. It might take central bank digital currencies, digital dollar, digital euro, digital control. They will tell you where you can spend or not spend your money because it's going to be on your phone. Russia admits to weaponizing oil exports. On Monday, Russia finally admitted that everyone has known since February, namely they weaponized commodities. The Kremlin said that Russia's gas supplies to Europe via Nord Stream 1 pipeline will not resume in full until the collective West, so it's not just the EU, it's North America as well, lifts sanctions against Moscow over its invasion of Ukraine. And here you have Ursula von der Leyen. She's like the energy EU Commission on Energy, whatever. She's some sort of an authority, and just she's just stupid. Part of her plan is to price cap on pipeline gas. And what that gets you is less product and higher prices. These Europeans are just the European leadership. I'm not knocking Europeans. I have family over there. The leadership is just so inept and incompetent. Their career, not even politicians, because they're not elected. These are appointed bureaucrats that sit in the EU. You don't elect them if you're a citizen in the Netherlands or in France or in Germany. They're appointed. They never held an honest day's work in their life. They've done the bidding of whoever would have they hired them for politics in the past. They know they could be trusted as controlled dogs of war for the bureaucrat elite. And they're just handed these cush positions and they're told, go out and do what you're told. And it ain't to help the common man. I'm going to skip this. This is just Russia forming their own global. They're fighting. This sums it up perfectly here, this image. COMEX here in the United States. This is the London Gold Exchange. And here's gold. How many times do you have to turn on zero hedge to hear another JP Morgan trader going to jail or getting fined for price manipulation, spoofing of the silver and gold complexes? So they're manipulating the gold price. The Russians are now going to form their own exchange. The Chinese already did this. So, and who's going to back them? The BRIC nations. That's 3/4 of the globe's population. So it looks as though the BRIC nations have their eyes set on the COMEX and the London Board of Exchange, and you're going to see gold prices rise. We'll skip this. This is just more of the same. Euro implodes, more of the same. We could skip this. You get the point. And the people now are stepping out into the street about this. You had 70,000 Czech protesters. You had a very large protest over in Serbia. Nobody reported about it that much, but they were out there. In fact, I think we have a video. Video, Bob? Forget it. We're killing too much time here. I thought we had a video. All right, back to the United States. Before we get into the United States, let's just appreciate this meme. Biden, MAGA proposals are a threat to the very soul of this country. The country. Bare shelves, open borders, closing businesses, riots in the streets, cities in turmoil, inflation, and we have this guy that's gone full steam totalitarianism. So while we have Rome burning, this guy is promoting another $13.7 billion of aid to the Ukraine to keep the war going for as long as possible. Ukraine is gone. It's done. They just want to keep this fire burning. They don't care about the European citizens. The globalists over in Europe, they're going to be nice and cool in the summer. They're going to be nice and warm in the winter. No problems for them keeping their lights on whatsoever. For the people, though, a pox on their house. So they're going to keep this war going, and we're going to help them. China slashes, this just happened today. China slashes FX deposit requirements to prop up yen. They're in big trouble over there in China. More Chinese news. more arms sales over to the Taiwanese, and we're stoking the arms, the probability of kinetic violence over in the Taiwan Straits. Insiders are dumping stocks. Pay attention to this highest level since 2021. Not much to talk about here, but I guess Paul Pelosi knew all about it because good old Paul, well, Pelosi sold 25,000 shares of NVIDIA at around 165.05 in July, and he made a nice profit on it. 1 month later, NVIDIA revealed that the federal government imposed export restrictions on the company's A100 and forthcoming H100 circuits. The new regulations will address the risk that the covered products may be used in or diverted to a military end user in China, Russia, blah, 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 blah. Shares in NVIDIA fell 7.7%. So Paul did very, very well for himself. Here's a chart of NVIDIA. NVIDIA is going lower. Since Paul sold his shares at 160, we saw a closing price on Friday at 136.47 per share. Congratulations, Paul Pelosi, Trader of the Year. Congratulations. Have a cocktail on me. Let's go to some comments. We'll do some chart requests. Definitely like and subscribe to the Bob Contrarian crew. Thank you very much. Bob gives the best beat on macroeconomics in less than 75 minutes. We went a little bit long tonight, but I think it's worth it. Thank you, Yoga Mac. Luis, 42 watching, 42 likes. Hit the like button. Yes, please hit the like button. Helps us out with the YouTube algorithm. Thank you very, very much. I'll buy oil during election season when all the admin efforts to keep it down will have been spent. Wise, Clark. I like that. Seymour Rivers. Don't you assume most people in the oil business are Trump supporters, not POTUS? Why would lower prices for oil? Why would they lower prices of oil for him? It's not the oil companies that are lowering prices. We're manipulating oil lower by dumping the Strategic Petroleum Reserve onto the markets. We're at our lowest level on the strategic SDR, SPR, Strategic Petroleum Reserves, only supposed to be used during a time of crisis, and we are at the lowest levels since 1985. So they continue to dump millions upon millions of barrels of oil onto the markets. Plus, you have the Federal Reserve raising rates, and what's that doing? It's killing demand. So it's a two-sided thing. Oil companies aren't pushing down prices for Trump or for Biden. Remember, the cause of inflation is too much money, right? And you don't have production to keep up with the demand. Well, then you got a problem. The problem is not a problem. What Trump had going for him is that he brought demand online. There was plenty of supply out there. There was plenty of demand, but you had plenty of supply. That's the reason why prices didn't go through the roof. Biden came in, shut down productivity. He sent out stimmy checks. Demand went up, yet the economy wasn't growing. Then they reopened the economy. Demand grew even higher. People weren't going back to work. They're still driving around. No new productivity coming online. Prices went through the roof. Now they're trying to manipulate the price of oil into the election. Clark said it. I think it was Clark. In COP quarterly meetings, analysts asked about price, more likely 90. I think we're about 90 now, aren't we? In that neighborhood? Evil can only destroy. That's WEF. These global elitists, they got to go. They got to go. Canada piloting digital ID this fall. Yeah, they're really gone. Controlled managed decline is the goal of both the EU and USA. Yes. And the populist movement, yeah, and that's why we're evil. We're evil because they hate us. They hate us. It's scary. All my friends will cheer the destruction and cry out for more. Blows my mind. Sad story to tell. I get you, man. I know people like that too. Opt out of the fiat circus, buy gold and Bitcoin. Yes, definitely. Make sure you put your money in a crypto wallet, not on the exchange. Crypto wallet. When you start looking at charts of Lily, all right, we'll take a look at that. LLY. Ursula, President of the EU Commission. Thank you for that. Smart people here. And that no man might buy or sell, save he that had the mark. Oh my God. Talon, you're deep, man. I love you, man. You're deep. Savage. Or the name of the beast or the number of his name. Well stated. Proud to be Ultra MAGA and America always first. You bet. Vote out Dems, vote out Rhinos. Ditto. Love it. Trader Riser. Very true. If anyone wants to learn when to trade, thank you, Town. Thank you very much. I appreciate that. Yeah, 14-day free trial offer here. Join in. And great people in the forum. Very, very nice, intelligent people. Bob, always great information. Thank you. You're very welcome, Frank. I'll talk to you tomorrow. GLNG chart off pullback. You are on the list, my friend. I don't think you've expressed yourself too much as I go. Okay. Good call, Trader Eyes. Thank you for that. Enjoyed this episode. Appreciate your thoughts and accurate analysis. Thank you, Seymour. Thank you for being here. All right, let's do some chart requests. I have Larry and Franklin. So I know Franklin's going to cut out early here. So if Franklin's still on, we'll go to ARAC first. I think I may have already done this, but just in case. Weekly chart, ARAC looking really good here. Continuation move up higher. We tapped into that third standard deviation Bollinger Band. Doesn't mean we can't move up higher, but just a word of warning. We backed off of it last week, daily view. We're going higher. We're breaking out. ARAC going up higher. Folks, we're using TrendSpider, automated technical analysis. Checked out their website for a bigger than 35% discount code for Labor Day. Support at 308, resistance up at 338. You're going to close above 338. Game on to the long side for ARAC. Looking good. I think it goes up higher. For Franklin, PNRG. Go to the weekly chart. Weekly chart telling a nice story here. Folks, these are the automated trend lines. There you go. So we bounced off of two lower bands of rising upper trend, and we closed above resistance here in green at the 200 period moving average. Let's go to the monthly chart really quick. As a matter of fact, let's overlay monthly resistance. Nothing popping up here. Let's go to the monthly chart. Be careful here. Monthly chart. I don't know why this is not popping up on the weekly chart. Let's try this again. Weekly chart. I'm going to overlay monthly resistance. For whatever reason, it's not. Oh, here it is. I didn't click the button. All right, be careful here. This is a weekly chart. In solid lines, you have weekly support and resistance. In dashed line, you have monthly overlaid support and resistance onto a weekly chart. Very powerful stuff. I would not be a buyer here of these shares because what we did last week is we rallied up and into monthly resistance and we backed off of it. And we have resistance up at around $95 per share. Me, I would like to be a buyer on a breakout above monthly resistance, no sensitivity. And I'll tell you what we would be looking for afterwards in a second. We'll keep this active for about a month. All right, so there's our breakout point. And if we close above it, this up here, this rising monthly resistance level becomes resistance. So if you buy down here on a breakout, you may want to look to stop out at this upper band of resistance because you could figure you're probably going to back off of that level. Daily chart. Not bad price action on Thursday, Friday. Thursday, you saw a bullish reversal bar. It looks like they're going to make another run here to try to break this thing out. Show patience. You know, if you're going to be disciplined in your buy on a breakout above 95.50, scratch the itch. So at least you're in the trade. Use a stop loss if we fail to hold that daily breakout point, and then add more on a firing of the alert above a closing price above the monthly resistance level. That's the play on PNRG. Lilly. Eli Lilly. We do not have a new monthly lower low yet. Weekly chart. We have new weekly lower lows. I don't like this price action. We're putting in lower highs. And we are threatening to take out prior lows. If we take out 297, it's all over for Lilly. Lilly's going down. I would avoid it. I'll watch and see if it holds 297. If it does, and we consolidate, you could nibble here, tight stop just below it, add more on a breakout above this upper band of resistance at around 302, 303 per share. Daily view. It's going down. This is an outside reversal bar, folks. Again, 5-part video tutorial, my top 5 favorite candlestick patterns. This is one of them. The probabilities of Eli Lilly seeing lower lows is very, very strong based upon this bearish engulfing, also known as an outside reversal bar. Very, very bearish. Avoid. GLNG. We spoke about natural gas a lot tonight. GLNG is looking really good here. Monthly time frame, looking better than nat gas. That's for sure. It's displaying relative strength versus the underlying commodity. I like that. We are at resistance. $27.66 is resistance. Do we have monthly resistance above? Not enough data to give us a monthly resistance. We're actually on a monthly chart. That's why. Duh. And we do not have monthly resistance above. Weekly chart. Problem here on the weekly chart. Problem. We broke out the week of the 15th. Continuation breakout. The following week, last week, a bearish reversal bar and a bull trap. We broke back down below a support level. So if I bought the breakout on this week, the week of the 15th, I would have stopped out on this closure back down below support. So to me, there's a problem here. You get a new week. If you didn't stop out, if you get a new weekly lower low, I would exit the trade. If we recapture and close above 27.50 per share, I would add to the trade. It's got to close above that mark. Don't trade it intraday just because it closed above 27.50. It's got to close above that mark. Yeah. So they're rallying it back after a breakdown in an effort to try to recapture support. You got to wait to see whether or not we can capture 27.50 to 27.75 per share. We'll leave it off with Pio because I never heard of it. First, let's go to comments. I love America. Who's with me? We are all with you. God bless America. I love it, but we are, we'll get through it. We've seen harder days than this. The Great Depression, and out of the Great Depression came the world's greatest generation. Talon, happy Labor Day to you, my friend. Hey, Bob, did you catch the Amazon short request? I saw it. I forgot it. Thanks for the reminder. We will not forget you, Falcon. Are you good with? Oh, that's right. You want to know about the long-term puts. Lily, let's revisit it. Let's go back to Lily really quick. So when I use long-term puts, I don't usually buy the puts outright. What I'll do is I'll open up a spread, meaning I will sell a deep in the money put, let's call it a 70 delta put option, and then I'll buy a 20 to 30 delta, I'll buy a 70 delta put option, and then I'll sell a 20 to 30 delta put option. That helps finance the trade. Yes, it caps the profits that you can make, but you sleep better at night. I sleep better at night knowing that I'm far out in time. I would definitely go minimum 60 days on those options. I don't know what you define as being long-term options. I would definitely go 60 days because once you hit 45 days, you get time decay that picks up. You don't want to be a part of that. That's a loser's play. That's why I like to sell premium within that time frame, 45-day window and shorter. So that's the trade I would play here. So yeah, I'm fine. Just as a definition, understand my version of long-term put options, not 30 days, not 45 days. It's more like 60 to 90 days, even going out as much as a year, because I don't want that time decay. I want a lot of time to be wrong, then to recover from that loss and allow the trade to play out as intended. So yeah, I'd be fine with that trade. Amazon. Amazon is setting up as a short, yes. This is a daily chart. First, I want to check with the weekly chart to validate my thesis. I would not go shorting it yet because we bounced off of support. You can see I have an alert set here. I don't know if this is expired at all. Yeah, this is expired. Let's reset this. So I want to know whether or not we break through weekly support. And I would open up a short position, but I wouldn't go all in. Our alert is set here. You can see it up here on the sidebar. Right there. Now, let's say that the alert fires off on Monday. Let's say by 3:55 Eastern Standard Time, it appears that Amazon is going to close down below support at, let's call it 123 per share. I would nibble on the trade. Then I would wait until Friday to see whether or not we have either A, held the break down, or B, rallied back to close above that support level by the end of business on Friday. If we rally back by the end of business on Friday, I would probably take that initial opening trade, take a small loss, exit, because they may defend that support level and take the shares up higher. But if you see a if we close down below by the end of business on Friday, down below that support level, I would add to that short, assuming that we haven't run too far away from that breakdown point. Because in all probability, the following week, they're going to try to rally it in an effort to try to recapture the support level. I could always lean into the short yet again the following week. But I would nibble into the trade. Don't go jumping in all at once. If on Monday we're trading down below weekly support, wait until Friday before you got heavy into the trade. If we appear poised to close down below weekly support, lean into it. If we lean into it short, our first support target is going to be down here at 116.04. Good swing trade. Set your alert automatically down at 116.04. If it strikes, me personally, I'd get out because you got to expect a rally off of that support level. Alan, you're very welcome. And what was the other one? Paya? We're going to leave it off with this one because my voice is going. P-A-Y-O. Pioneer Global. Ever heard of it? Love it, though. The power of the automated trend line. I've never seen this stock before in my life. Why do I like it? Not because of this chart, but because of this one. The automated trend lines. I didn't draw these. The algorithm did. TrendSpider, 35%. Could be greater than a 35% discount code. Labor Day sale. Go to their website. Check it out. We broke out the week of August the 8th. Consolidation. We're looking for a continuation breakout here on Pile. What do I want to do? I want to create an alert. I want to know when we break out. And we're good to go. Now, what if we don't get a breakout? What if we pull back? Where do I want to buy? Down here. Because we never got a retest of the breakout point. Touch, bounce. I don't care if it breaks down because it wouldn't be a short. We'll keep a little bit of sensitivity on. P-A-Y-O. Keep this active for a while because I like the setup. I'll share this with you because there's a lot going on here. But wait for the breakout. Falcon, you're very welcome. Thanks for being here. Talon, love you too, brother. Guys and gals, thank you for being here. The pleasure is all mine. It's my honor. Smash the like and subscribe button if you could. Leave a comment if you want. And everybody have a profitable trading week. And I'll talk to you soon. Be well.